Hi everyone, if you are wondering how can I take advantage of the price of oil and energy and commodities soaring because of what is happening over in Russia, how can I make sure I can buy some oil stocks? Because right now, even prior to the Ukraine conflict, the oil and the energy sector was the only sector green since the beginning of the year. All right. So I'm going to share with you in this video what the media doesn't tell you about your approach on investing in oil stocks and why I believe there is still a lot of money being made here to be made here in this specific sector. But there is a reason why it's not being as published, as it should be, as compared to other sectors or other stocks. So there is not a lot of hype, but this is where you have to make there is the most amount of money to be made, I believe, in 2022. So if you haven't noticed, well, the share price of oil, I mean, not the share price, the price of energy in general is soaring, especially because of what is happening in Russia. All right. But before we actually tackle this, you can see that today, it's literally 10 minutes away from the market closing. And the market could not withstand the gains they had today. So again, we are definitely in a bear market. But why is oil still climbing? Especially after President Biden did a Russian oil, embargo, sanctioned Russian oil. Why? I mean, the oil will start. I mean, the price of oil will finish this session almost up 4%, and I bet you that tomorrow it will gain again. There are high chances that tomorrow it can be up again. So before we actually jump into how to invest, let me just share with you what has been happening that led to high prices there, which is not what the media love to publicize because it's not, following or matching a certain agenda. The thing is, in 2020, when oil prices dropped based on COVID lockdowns and everything, it made sense back then, and oil was already not that much loved by investors. But since then, as companies and countries started reopening and going back to a sense of normal or normalcy, people started traveling again, going to theaters, going to cinemas, to movies, going to vacation, summer, spring break, etc., etc. That's where oil started peaking again. But it was always, hit again with the variance. So a bunch of these companies that were producing oil decided to stop producing oil because it doesn't make sense to produce something that nobody will use. All right. And that's why little by little, the price of oil has been climbing, especially given the pressure put by OPEC. OPEC is the Organization of Petroleum and Energy Producers, Russia, US, Nigeria, Venezuela, China, etc., etc. So these guys decided to stop producing as they usually do on a monthly basis, on a yearly basis, because again, what's the point of producing something and putting it out there in the market if nobody will actually use it? But what you don't know and what the media won't tell you is the fact that we have two things. Well, the first one is COVID hit pretty much the entire economy of um, Saudi Arabia, Qatar, all of these big countries that are part of OPEC, the Arabs, because oil production and energy production is really what makes 99.9% of the economy. And the remaining 0.1% is literally tourism. All right. So because of COVID, at some point, oil was even trading negative. So people were paying the dockers to actually store oil. It happened in a fraction of a day, but it did happen. So based on this, they made sure that they will use their influence on OPEC in order to make sure not only they recover all the money they lost in 2020 and in 2021 because their budget went negative because of this. And right now, that also created what we call a super cycle, meaning on one hand, you have a demand not being, a supply not being literally where it's supposed to be. And on the other side, you have, the demand, the soaring demand, as now we are putting COVID behind us. People are willing to travel again. People are willing to do what they wanted to go again. And business travel is recovering slowly and slowly. So all of these aircraft, these airplanes, these airlines companies are going to use oil more than they did in 2021 and in 2020. All right. So even before Ukraine started, we already had this, supply and demand crunch. But Russia only added the fuel on the fire because oil was already expected to trade at triple digits, $100 a barrel. But Russia coming here is just catapulted everything. Now we are seeing what we're seeing 120, we're seeing 130, and the word on the street is that we may see 185 as long as Russia and the Ukraine conflict goes on, which is not surprising because Russia is one of the, if not the biggest producer of oil and energy, so oil, gas, and wheat in the whole European continent. So by sanctioning the Russian oil, which I believe is representing only 3% of the imports of the US in terms of oil, it doesn't really solve the issue. Reason why the share price, I mean, the price of oil, even though it retraced a little bit because it was going to the 126, the 128, before the news came out, and then it retraced a little bit to the 124 that we're seeing now. But the reality is, even with that, it will not solve the issue. As a matter of fact, it may cause the issue to even go worse. Because again, it's a matter of demand and supply. If there is not enough, oil in the market, what do you expect? Prices to go higher and higher. So this is what you have to keep in mind before you actually jump. All right. Now, let's also look at something that people don't really pay attention to. The oil prices is not that big. It's not that high, compared to what we may see on news. Let me phrase this. The price of gasoline isn't really at a record high. In fact, the inflation adjusted cost of driving a mile was higher for most of the past century. So it is not at the point where things are terrible for people to stop using oil or stop changing their habits that involve oil, like traveling, like driving, etc., etc. All right, because when you adjust inflation to this, it is still very lower to what we used to have in the past 100 years. All right, now what you also need to pay attention to is the fact that, well, oil is not a favorable or a most hype sector to invest in. It's not sexy to invest in oil because I've been talking about oil, as a matter of fact, since November 2020. Most of my net worth most of the stocks, not my net worth, most of the stocks that I own in my brokerage account, which is in the 6 digits, it's majorly invested into oil. Why? I explained that a couple of days ago in a separate video. But when you actually understand what is happening here, it makes sense why you should go long oil, not only because of the hype of what is happening between Russia and Ukraine, because I believe they're going to fade. But even when that fades away, even when that gets settled, we were already poised for oil prices to be high. The reality is that today, the International Energy Agency increased the estimates of the forecast for oil for the whole 2022 year, both for the Brent barrel, which is trading in London, and the West Texas trading here in the US. So they are now saying that the West Texas crude prices is going to be around $100 a barrel. This is up 25%, 27.5% from February forecast. Meaning, even when Russia and Ukraine settle down, and the whole war is stopped, oil prices are going to be still at triple digits. And this is where it gets very interesting to know, because companies that are producing oil, they have what we call a cost of production. Like any other company, they have to have a cost of production, meaning there is a certain level at which they will start being profitable. For some companies, it's $35 a barrel. For some companies, it's 45. For others, it's 50. All right. So when COVID hit, a bunch of these companies use what we call a hedge. It's like a protection. It's like an insurance. All right. They work with banks and commodity, trading firms to actually make sure that because of the uncertainty, they will be able to continue to sell price and sell oil and buy oil at a level that will be profitable for them. So it makes sense now. And right now, those contracts usually they may have taken those for, I don't know, 2 years, 3 years, or maybe the next 12 months. So right now, as we are just getting out of 2021, those hedge contracts for pretty much all of these companies are now fading away. That's why it means even when the prices go back to 100 or even $90 a barrel, there will still be cash cows. They will still pumping money as an ATM. And that's why you need to invest. Now, coming back to the bottom line, how can you position yourself in order to make sure you take advantage of these soaring energy prices? Well, first of all, invest into small caps. The small caps are those small companies or medium companies that you will not even know there exist prior to you looking for them. The big caps are the Chevron, the Exxon, the Shell, the British Petroleum, the Total Energies, the Halliburton, the Enterprise. Those are the big dogs. But the big dogs don't move as much as the small caps. That's why it makes more sense to be invested into the small caps. VSU, for example, this is an example of a small cap. If you look at where it was trading for the last year, all right, we're talking about a 230% gain on one stock only. All right. Now let's look at another small cap, one of my favorites, Calon Petroleum. If you look at the last year or so far, this is a 65% last year. But if you look at where it was trading prior to the pandemic, it was trading at the lowest was $4 a share. So from $4 a share to now, we are looking at 12, 1,300%. But if you look at a Chevron, which is a big dog, let's look at a Chevron, for example, or Exxon. All right. Same period, you will see that at the lows compared to where it's trading now, it is only 186% up. Only 186% up. All right. So that's why I strongly advise and suggest that if you want to be invested into the energy sector, in the oil and gas sector, which makes sense, then look for small caps, but also you can add a mix, in your portfolio, some of these big caps, the Chevron, the Exxon, in order to, kind of give you a little bit of insurance, because since they don't move as much as the small caps, they are not as volatile. On a red day, this can go down maybe 1 or 2%. On a green day, it can also go up maybe 5%, but a small cap will go up potentially 10, 12, 18, 20, 25% on a single day. But at the same time, it works also downtrend, on the downtrend. If it goes down, it can go down really, really big, like 8, 10, 12%. All right. But the bottom line is, even with inflation, so let's just say Russia and Ukraine is just settled, we still have inflation. All right. So oil is part of inflation calculation. So the fact of oil going up is also protecting you and benefiting you from inflation. So either way, it's a win-win to be invested into oil right now. If you want to have a detailed view on which, like the cheapest stocks, the best stocks to buy in energy, well, I made a video on that. I'm going to put it somewhere here. Make sure you watch that, and definitely going to give you all of those that I personally own, all of those that I've been watching, and all of those that will give you the best returns when it comes to capital appreciation, so growing your money, but also passive income. Because some of these stocks will give you it's giving me $500 every single month based on the dividend they pay, and it's supposed to increase as we get into deeper in the year. So that's it, folks.